presentation so that we can.
There you
Hi, good afternoon. Welcome to our webinar on tips for business funding. I'm Rob Sealander with the Nevada Women's Business Center and the Nevada Business Opportunity Fund. And today we are going to talk about tips to help you get your business funded. My role here at Nevada Business Opportunity Fund is working with small businesses, whether they're brand new or existing, to help them get the money that they need in order to start their business or grow their business, or perhaps just maybe get through a certain stage of their business. So I'm going to be pulling up a lot of the points from my personal experience, conversations I've had with people, things that have gone well, things that have not gone so well, to hopefully give you the best possible lending experience, which ultimately will lead to you getting funding for your business when you need it and the way you need it. So the first thing you need to do when going for business funding is make sure you know your business. Make sure you understand what it is your business does and what it has done historically, or what you're planning on your business to do. So you need to be able to explain all of that, and not in the course of half an hour, not really complicated, but very simple, easy to understand pieces, so that when you speak to somebody like me, I know what you do, what you're trying to do, and how I can help you. So when we have that conversation, if you're already in business, I'm going to be asking you questions like how long you've been in business, how many employees you have, what kind of revenue you did last year or maybe even just last month, what kind of profit you have at the end of the month. If you're working with people that are paying you 30 days out, 60 days out, I want to know some of the information on those details. So you need to be able to have that conversation. And what I get a lot of are people that say, well, I don't know, or it's complicated. And those types of answers don't really give me the confidence that that person understands their business well enough to be successful. And therefore, I have to dig a lot deeper and go a lot further to see if I can actually add value to that company by getting them funding, or am I going to be creating bigger problems for that company by getting them the money when they're not really sure how to use it, what they're going to use it for, or even really how to manage it. The next thing that you should know is how much money do you need, what do you need it for, and when do you need it? And a lot of times people come in with a very generic answer. Well, I need it to start my business. I need it to grow my business. That's basically a given. But we need to know, I need to know, are you using that for equipment? What kind of equipment are you buying? Are you buying brand new equipment? Are you buying used equipment? Is that equipment, let's say, perhaps available at a special price for if you buy it in the next 15 to 20 days? Or is that something that if you buy it 3 months from now, the price is still going to be about the same? So a lot of people also wrap that up into what's called working capital, which is kind of the catch-all for anything that people don't really know how to categorize. You want to be able to break that out into different pieces. So for example, is some of that working capital, are you going to be doing marketing? Are you going to be doing any types of promotions? Are you going to be hiring people? Are you going to do any type of traveling? Like, for example, if you're going to be at trade shows, anything like that. A lot of people wrap that up under working capital. And working capital are not really words that we can work with when it really comes to getting you money and figuring out where that money is going to go and what you actually need it for. So you want to be somewhat specific. So if you're looking to buy, let's say, a computer, we don't need to know the brand and the model number and the color and the size screen and all of that. But you may want to say, I need a laptop and it's going to cost $600. And I need a color printer that's going to cost $500. You want to be at least specific at that level so that we understand what you want to do. Because to say office equipment means different things to different people. If you're a consultant who needs just a laptop, then office equipment may just be that laptop, maybe a printer, a desk, a chair, and a phone. If you're a graphic design office equipment now means computers that can actually handle graphic design. There might be some editing software in there. There might be a screening room in there. There may be a whole lot of other things that are going to come into play just because of the type of business that it is. So you also need to know what loan proceeds can be used for. So for example, we can fund equipment, we can fund salaries, tenant improvements, and that's when you go in and you buy a place or you rent a place and you need to revamp the inside of it. Maybe painting, maybe putting in shelving, maybe a complete overhaul. But there's also things that we cannot fund. And those are things that are, let's say, not federally legal. So you don't want to waste your time and a lender's time trying to get money for maybe a marijuana business or something in the gaming space, since we're here in Nevada, because those are the types of businesses that we actually can't fund. There are people that can provide capital for that, I guess, investors, things like that, but you really are going to need to have to figure out who those people are. And you also want to make sure that you have your timelines down. So is it going to take you, especially if you're a brand new business, so let's say you get funding, are you going to be open for business in a week? Are you going to be open for business in 2 or 3 months? Because that's going to depend, can you pay back the loan? When can you pay back the loan? When are revenues coming in? What can we expect? What can you expect? Because the last thing you want to do is have that timing be off. Your business isn't generating revenue, and oops, all of a sudden you have a $2,000 loan payment that you can't make because things weren't timed out as they could have been. You also want to know the situation for 2 scenarios. So one is, what do you ideally need? So if you could qualify to do things exactly the way you wanted, within reason, of course, what does that number look like? So let's say that number is 50,000, and it's going to take you 50,000 to start up your retail space, inventory, computers, some shelving, some things like that. But let's say you don't qualify for 50,000, or because maybe, let's say, your cash flow doesn't allow for you to be able to pay a $50,000 loan payment. But let's say you qualified for 35,000. Now you need to know, could you actually make your business work? Could you start it out? Could you open up your doors? Can you start generating revenue? Can you get customers, have inventory, and do all the things you need to do with 35,000 instead of 50,000? Because if that number is not going to work for your business, you don't want to move forward with the loan or even in the loan process with something that really is not going to do anything but saddle you with debt if the loan gets approved, or go through the process only to have the loan denied simply because it's very clear that that $35,000 is not going to actually add value and get you where you need to go. So I always advise people, have a best case scenario, but also know what your limits are at the bottom. Because if you need, let's say, $100,000 worth of equipment, and you can only get approved for a loan of $50,000, then you either need to come up with the other 50 in another way, find cheaper equipment or a way to get that equipment at a lower cost, perhaps by leasing or something, or you need to hatch a completely different way to do your business because you're not going to be able to get that equipment. So to that, and this is a really important part, know what's going to be expected from you. So we look at, for an existing business, we look at 3 things. For a startup business, we actually look at 4 things. So for a brand new business, we're going to be looking at credit, cash flow, collateral, and equity injection. So credit, you need to know what's on your credit score or what's on your credit report. Are there collections? Are there charge-offs? Are you default on any student loans? Did you maybe go through a divorce and perhaps some of that is still lingering on your credit report? We at BEDC and Nevada Business Opportunity Fund, we are not credit score driven. And that's really important to know because if you go to a traditional lender, basically they're within a structure that if you're above a certain number, it's an automatic yes. If you're between two numbers, so let's say if you're above 680, it's a yes. Let's say you're between 620 and 680, it's a maybe. And let's say you're below 620, it's an automatic no. They don't look at what the reasons are. They're not really interested in what the reasons are. They look at the numbers and they decide whether or not you qualify for that loan or you qualify for that credit card. We work slightly different, or very different actually. We're interested in what's on your credit. Because if you, let's say you broke an ankle, something that happened to me a couple years ago, and you get maybe 30 days late on a couple of card payments and maybe 60 days late on one card payment, but you were current before then and you're current after then. But in that 2 or 3 months, let's say your credit takes 5 or 6 delinquent payment dings. That can bring your credit down by 100 points or even more. And so what we're going to do is we're going to look at it and say, instead of saying, oh, well, your credit score doesn't match our needs, we're actually going to say, okay, everything was fine. We're going to ask you what happened when all of a sudden everything wasn't fine. And a broken ankle, maybe a hospitalization, maybe you were laid off from work for a couple of months, maybe you had to take time out of work to care for a sick parent or child or something, and then everything was current again. We can work with that. That's understandable. It's life. These things happen. We'll be able to work with you to get those funds. If 6 out of 10 of your credit cards are, if you are default in federal debt, that can actually get in your way of getting a loan. Cash flow is another big one. We do what are called controlled disbursement loans. And what that means is that when you get approved for the loan, so let's say it's a loan of $10,000 or $50,000, you never actually get that cash in your bank account. When you go for a personal loan, they approve the loan. It either goes in your bank account or you have access to that money through a card or something like that. It does not work that way with business lending, at least not the way that we do it. And that means that you need to have the cash flow, the income from your business, from an outside source. Let's say you have employment or your spouse has employment, rental properties. It could be any number of places that you can have income coming in, but you're going to have a loan payment due somewhere between 4 to 6 weeks approximately after you sign the commitment letter and your loan gets funded. So if you don't have the funds coming in the beginning to be able to pay off that loan, that's really going to get in our way of being able to do that, because that's going to tell us that there's a very big potential that on the first payment, it's not going to go through, and all of a sudden there's going to be a whole different process that gets kicked in. So you want to know what kind of cash flow you're going to need. I tell people, just general rule of thumb, if you haven't even talked to anybody yet and you're just kind of figuring this out, general rule of thumb, count on at least $1,000 a month to repay every $50,000. It will probably be a little more than that, but that would be closer to the bare minimum it would be if everything else was strong and you got the lowest interest rate possible. So the third thing we look at is collateral, and that's basically stuff that can be used to secure the loan. So if you're buying, let's say, restaurant equipment, you're buying a truck, a delivery truck, a transport truck, things like that, those things will be taken into account for collateral, but not for necessarily the price that you paid for them, unless you're really getting them under market value. So think about it like when you buy a car, right? You go to the car dealer, you agree to buy a car for for $20,000. You sign all the paperwork, you drive off the lot. Your car is now worth less than you actually owe on it. And I know it's really frustrating, but that's the way it works. So you're going to have to find potentially collateral to bridge that gap. So again, you'll need to know if you're getting something really under market value, which has happened for some clients of mine. They didn't need additional collateral because what they were buying was they were getting it at such a great price that that could easily be resold for almost double what they paid for it. The fourth thing that we're going to look at, especially for a new business, is equity injection. Nobody does 100% business lending or business investing. We want to know you have some skin in the game. We want to know that when your business maybe doesn't work out as smoothly as you think, maybe customers aren't coming as regularly as you think, or maybe revenue's not at the level that you had expected, that you are going to stick with it and that you are going to make the adjustments, make the changes, and do the things that are going to grow your business, reduce your costs, increase your revenues, bring in customer traffic. What we don't want is a situation where you say, well, it's not really my problem, and walk away. So we want to see that you have some skin in the game, because that tells us that when the going gets tough, you will be more likely to make the effort and to take the action you need to take, but also that your decisions will be in the best interest of the business. That becomes important to us. If you're an existing business and you're looking to do something, then we want to see that you've got some money in that project. So let's say you are a retail space and you're going to expand into the space next to you. So you're going to double your size, or let's say add some volume to your floor space. And let's say that's going to cost you $30,000 to do. We're going to want you to come in with, let's say, approximately, what is it, $7,000 in order for you to be invested in doing that as well. Now that number can shift a little bit. Maybe it'll go down to 20%, maybe it'll go down to 15%, depending on your credit, cash flow, collateral situation. But it's not going to ever be a situation where you don't put in anything and you completely lend that money and work completely from money that you have actually borrowed. That does not happen. The same for investors. You will not find somebody who invests in your business 100%, because if they are investing that 100%, they basically own the business, and they don't want to be a business owner, they want to be a business investor. So I hear that a lot, people saying, I'll go find an investor. And then they end up coming back to me 2 months later because nobody's going to invest in their business, because, again, they don't want to own it, they want to invest in it. So to all of those things, with the exception of your credit report, you're going to have supporting documentation. So if you say, hey, I make $5,000 at my job, you're going to have to show that with a W-2, a 1099, you're going to have to show that you do indeed have that income. You're going to have to provide things like bank statements. We ask for the most recent 3 months of bank statements, business and personal. Business, if you've been in business, we're going to look at tax returns. So make sure that your taxes are filed. Even if you are in a situation or have been in a situation where legally you are not required to file, you still want to make sure you do that, because those things are going to be requested. And also know what other documentation might be needed. So for example, let's say you do not have American citizenship here, but you've got a green card, you're employed here, you're married, you have a good job, you've got all of these things. We're going to need a copy of that documentation. And we can't just take the fact that you're employed maybe with a large company or somebody reputable. We actually need to see a copy of the green card or documentation that gives us that same information. When was it issued? Until when are you allowed to be a permanent resident? What are any of the conditions tied to that? That's just something that we absolutely have to have. So again, you want to have a conversation with your lender. And I would say that's the biggest tip of all. Don't wait until you need the money to start the conversation. If you think you might be needing money, have the conversation. If you're going to be starting up a business, I would almost say at some point, you're going to need funding. Maybe a few $1,000s, maybe a few $100,000. But start having those conversations. Have those conversations every 6 months or so. Interest rates change, rules change, legislation changes, the business market changes, interest rates change, all of those things change, and that can affect your loan. A lot of times what happens is people come in and they need the loan and they need it today, and because they've let themselves get into an emergency situation, we will lend for people, as will other business lenders, to start and grow their businesses. We are not in the emergency lending space. It's not like you're going to get evicted from your business space if you don't pay your rent in 3 days. That's not something that we can actually help with. It's not it's not an area that we get involved in. So you want to have those conversations early on, find out how long it's going to take. If you can look 3 months down the road and say, hey, given this, we might run into some places where we're going to need a little help paying the rent, then we can potentially come in and actually do something, because now we're talking about helping your business get through a period. We're talking about helping your business grow, helping your business do more business instead of saving you out of a crisis. Lenders, we don't get very comfortable when people are actually in crisis mode. And except unless a good crisis would be, let's say a national chain calls and they want to carry your product and they want to start doing that in the next 30 days. That's a good crisis we can actually work with. But when it comes to, I've got salaries due in 3 days, I don't know how I'm going to pay it, that really comes across as just bad business management and bad financial management. And I'm not saying that's always the case, but that's usually the case for something like that. So once you start having those conversations, you really want to stay in touch with with somebody like me, with the lender. A big part of my job is actually going to bat for you, to lobbying within our company. I talk to people all the time. I'll talk about a client. They'll say, well, we don't really feel comfortable about doing this. I'll say, and I'll give more and more and more information about why I think it's something that we should do. And a lot of times things might get denied at one point. Then I or one of my colleagues will go in, we'll argue that, and that actually gets moved from being perhaps potentially declined to where we can actually get the business money. But for that, I need my clients to stay in touch with me. So if you're going to be working with me and you want a loan, I'm going to need you to stay in touch. If it's going to take you 2 weeks to get a piece of documentation, for example, that's fine. Let me know. But when calls go unanswered, when emails go unanswered, when documents get requested, and a week later, 2 weeks later, 3 weeks later, they're not there, that doesn't give me the confidence or my colleagues the confidence to really go in and lobby on your behalf and really talk about how much you need this, how much good it's going to do, and how we can really help your business. So it's fine if you change your mind. It's fine if it's going to take you a while, but keep my colleagues, keep your lender in the know, in the loop of what is going on and what you're doing. Because when you vanish, that raises a whole lot of questions. And when people vanish for 3 or 4 weeks and then come back and all of a sudden they need the loan and they need it right now and they need me to do all this stuff, honestly, I'm not going to be as motivated for that person as I'm going to be for somebody who has kept me up to date, had the clear communication, and really done the things that they need to do on their end. So that's really it. Start the relationship with your banker. Start the conversation there. Know what their requirements are going to be also for you to be bankable. Being bankable means that you can go to one of the big banks or the credit union and get the loan that you need. Most of them want you to be in business 2 to 2.5 years. They want you to have good payment history and all of those kinds of things. So you want to make sure that you're approaching all of this not from a how do I get money today to start my business, but how do I get money today and set up and start my business so that at a year, 2 years, 5 years, 10 years down the road, you're still going to be in business and you're going to reach the goals you want to reach and you're going to be able to do the things you want to do and have your business be what you want it to be. And that's really what we want for you. So if you want to talk about your personal business situation, if you're thinking of going into business, maybe you're already in business, give me a call. Let me know. Happy to have the conversation with you, either over the phone, in person, on Skype. My phone number is 702-734-3555. You can also speak to one of my colleagues. You can go to our website and get information there. Also apply right online. That is www.vedc, Victor Edward David Charlie, Valley Economic Development Center.org/Nevada. And if there's any questions that we can answer for you, we'll be happy to do it. We also host the Nevada Women's Business Center. 30% of our clients are men, so for all the men watching, don't worry, we help absolutely everybody. And through that program, we can help with your business plan. We can help you do your financial projections. We can help you get all those things in order that you're going to need when you apply for funding. And since we do lending on the other side, we'll actually be able to help you set that up from the point of view that a lender is going to be looking at it, to, again, set you up for success. So that's basically it. We hope to hear from you soon and hopefully see you on our next webinar. Thanks.